Stop right there. Are you a freelancer, a consultant, a small business owner, or anyone earning income for yourself, generating real profits from your hard work? Then listen up, because this could be the most important financial advice you hear all year. Advice that could put thousands, tens of thousands, or even hundreds of thousands of dollars back into your pocket, legally and ethically. I want to save you from a common, brutal financial mistake that far too many entrepreneurs are making right now, often without even realizing it. I'm talking about the silent killer of your wealth, self-employment tax. That brutal, unforgiving 15.3% that eats away at your profits before you even get to consider income tax. It's soul-crushing, isn't it? You hustle, you build, you innovate, you put in the long hours, and then you see that massive chunk of your hard-earned money vanish into the abyss of self-employment tax. It feels like an unavoidable burden, a necessary evil, but let me tell you, for many of you, it is absolutely, unequivocally not unavoidable. There is a powerful, legitimate strategy that can dramatically reduce this tax burden, freeing up capital for your business, your investments, or simply for your peace of mind. Here's the reality. Many of you have wisely formed an LLC, a limited liability company. Smart move, absolutely crucial for protecting your personal assets from business liabilities. That's step one of building a solid business foundation. But here's the kicker, and this is where so many intelligent, hardworking entrepreneurs miss a massive opportunity, often because they simply don't know any better. By default, an LLC is taxed as what the IRS calls a disregarded entity. What that means in plain English is that for tax purposes, if you're a single-member LLC, the IRS treats you just like a sole proprietorship. All your business profits flow directly through to your personal tax return on a Schedule C, and every single one of those profit dollars, every last cent, is subject to that brutal 15.3% self-employment tax. This tax covers your Social Security and Medicare contributions, and it's levied on essentially all your net earnings from self-employment, up to the Social Security wage base for the Social Security portion, and then the Medicare portion continues indefinitely. It's a silent, insidious drain on your financial resources, and it can feel like you're constantly running on a treadmill just to stay in place. Imagine you are a brilliant software developer, a skilled marketing consultant, or a talented photographer. Your LLC is thriving, pulling in $100,000 in net profit after all your business expenses. If your LLC is taxed by default as a sole proprietorship, you're paying roughly 15.3% on that entire $100,000. That's $15,300 right off the top, just for self-employment tax, before you even calculate your federal or state income taxes. That's a huge sum of money, money that could be invested back into your business for growth, money that could fund your retirement accounts, money that could provide a safety net for your family. It's a painful reality that many entrepreneurs face year after year. The consequence of getting this wrong, or rather of not optimizing your structure, is simply bleeding money. You are literally throwing away thousands of dollars every single year that could be working for you, building your dreams, or simply giving you a higher quality of life. I want to save you from this nightmare of needlessly overpaying the IRS. But what if I told you there's a simple, powerful election you can make right now that can dramatically reduce that self-employment tax burden? I'm talking about electing for your LLC to be taxed as an S-Corporation. This isn't some shady loophole, some obscure trick. It's a legitimate, widely used, and IRS-approved strategy employed by millions of savvy small business owners across the country. You then pay yourself a reasonable salary. This salary, just like any other employee's salary, is subject to regular payroll taxes. That's Social Security and Medicare withholding. But here's the crucial, game-changing part. Any additional profits your business generates beyond that reasonable salary can then be taken out as distributions or dividends, and these distributions are not subject to self-employment tax. Let me repeat that because it's the cornerstone of this entire strategy. Distributions from an S-Corp are not subject to self-employment tax. This is where the massive savings come in, directly impacting your bottom line. Now, I know what some of you are thinking. Can I just pay myself a tiny salary like $10,000 and take the rest as distributions to avoid all taxes? Absolutely not. That's a huge red flag for the IRS, and it's a surefire way to invite an audit. The key phrase here, and it's critical, is reasonable salary. What does reasonable mean in the eyes of the IRS? It means what you would typically pay someone else to do your job in your industry, in your geographic area, given your experience level and the responsibilities you hold. It needs to be defensible. This is precisely why working with a good, experienced CPA is not just recommended, but practically non-negotiable when you make this S-Corp election. They will help you navigate this critical determination, finding that sweet spot for your salary that is fair, defensible, and legally maximizes your tax savings without attracting unwanted IRS scrutiny. They understand the nuances of what constitutes a reasonable salary based on current IRS guidelines and industry benchmarks. Let's put some concrete numbers to this, because that's where the real understanding kicks in. Imagine Sarah, a highly skilled freelance web designer. Her LLC, by default, is taxed as a sole proprietorship. Last year, after all her legitimate business expenses, she made a net profit of $80,000. On that entire $80,000, she's on the hook for roughly 15.3% in self-employment tax, which comes out to approximately $12,240. That's a huge chunk of her hard-earned money vanishing before her eyes. Now let's say Sarah, having learned about this strategy, makes the S-Corp election for her LLC. After consulting with her trusted CPA, they determine that a reasonable salary for a web designer with her skills and experience in her market is $45,000. So Sarah pays herself $45,000 as a W-2 salary. This $45,000 is subject to regular payroll taxes, Social Security, and Medicare, which works out to about $6,885. That's the 7.65% employee share plus the 7.65% employer share. But here's the magic. The remaining $35,000, $80,000 total profit minus the $45,000 salary is taken out as a distribution. That $35,000 is completely legally and ethically not subject to self-employment tax. Her total self-employment payroll tax burden is now only on the $45,000 salary, not the full $80,000 profit. This is a direct saving of over $5,000 just on self-employment taxes alone. Think about what Sarah could do with an extra $5,000 in her pocket every single year. That's a new piece of equipment, a marketing campaign, a significant contribution to her retirement, or simply a much-needed vacation. Now let's consider David, a successful marketing consultant running his own agency. His LLC consistently generates $150,000 in net profit. If he's still operating as a default LLC, he's paying 15.3% on most of that $150,000. After the Social Security wage base, it drops to 2.9% for Medicare, but it's still a huge amount. This is roughly $22,950 in self-employment tax, a truly painful amount that he watches disappear every tax season. But if David wisely elects S-Corp status and his CPA advises a reasonable salary of $70,000 for his role, he pays payroll taxes on that $70,000, which is about $10,710. The remaining $80,000, $150,000 profit minus $70,000 salary is taken as a distribution, entirely free of self-employment tax. David just saved over $12,000 in self-employment tax. This isn't just a small adjustment to his taxes, it's a monumental shift that significantly boosts his personal wealth and financial trajectory. This is about building your future, about having more resources to invest in your dreams, about securing your financial independence. I want you to understand the profound impact this one strategic decision can have. The consequence of not understanding this, of not making this election when it's appropriate for your business, is simply bleeding money year after year. It's not just a missed opportunity, it's an active, ongoing drain on your hard-earned capital. I want to save you from this nightmare of needlessly overpaying the IRS when there's a perfectly legal and ethical solution available. Now, I know what some of you are thinking. This sounds too good to be true, it must be incredibly complicated. I hear this concern all the time. S-Corps are too complicated, too much paperwork, too many headaches. Here's the reality. Yes, an S-Corp does require a bit more administrative effort than a simple sole proprietorship. You can't just ignore it. You'll need to run payroll for yourself, which means using a payroll service like Gusto, QuickBooks Payroll, or ADP, filing Form 941s quarterly to report payroll taxes, and issuing a W-2 to yourself at the end of the year. You'll also need to file a separate business tax return Form 1120-S for the S-Corp, in addition to your personal tax return Form 1040. This absolutely means you'll almost certainly need a good CPA and possibly a payroll service. But let me be crystal clear. The cost of that CPA and the payroll service, for most businesses generating profits above a certain threshold, is overwhelmingly dwarfed by the tax savings you'll achieve. It's not an expense, it's a highly profitable investment in your financial future. It's about being strategic, not simply avoiding complexity at the cost of your own money. Another common misconception I hear is, I don't make enough money for an S-Corp. It's only for big businesses. This is another big one, and it prevents many from even exploring this option. When does it actually make sense? While there's no single, universally applicable number, a general guideline is that if your business is consistently generating $60,000 to $80,000 or more in net profit, that's after all your business expenses but before your salary, it is absolutely, unequivocally time to seriously explore the S-Corp election. Below that threshold, the administrative costs, CPA fees, payroll service fees, might eat into your savings too much, making the net benefit negligible or even negative. But even if you're consistently hitting $50,000 in net profit, it's worth running the numbers with a professional because every business and personal financial situation is unique. Don't self-diagnose and disqualify yourself. Get professional advice. So how do you actually make this powerful election? You make the S-Corp election by filing IRS Form 2553 titled Election by a Small Business Corporation with the Internal Revenue Service. This form needs to be filed by March 15th of the tax year you want the election to take effect, or at any time during the preceding tax year. For example, if you want your LLC to be taxed as an S-Corp for all of 2024, you need to file Form 2553 by March 15th, 2024. This is a critical deadline, so mark it on your calendar. If you miss the deadline, don't panic entirely. The IRS does have provisions for late elections if you can demonstrate reasonable cause for the delay, but it's always best to be proactive and get it done on time to avoid any potential headaches or delays in your tax savings. Don't procrastinate on this. Every single day you delay could be costing you money that could be in your pocket. Beyond the tax forms and the filing, what are the operational changes you need to be aware of? When you operate as an S-Corp, you need to treat your business as a true separate entity, distinct from yourself, the owner. This means maintaining separate bank accounts for your business, meticulous bookkeeping, and even holding annual meetings and keeping minutes, even if you're the sole owner. While the formality can feel a bit much for a single-member LLC, these steps reinforce the legitimacy of your business structure and, crucially, the reasonableness of your salary in the eyes of the IRS. These are not optional steps. They are critical for maintaining your S-Corp status and avoiding any issues or challenges from the IRS down the road. Let's talk about the costs involved. Because while the savings are substantial, there are indeed additional expenses. A good qualified CPA who specializes in small business taxation might charge anywhere from $1,000 to $3,000 or more, depending on the complexity of your business and location, annually for S-Corp tax preparation, ongoing advice, and payroll oversight. Payroll services like Gusto or QuickBooks Payroll typically cost somewhere in the range of $50 to $100 per month, depending on the features you need. Add it all up, and you're looking at maybe $1,500 to $4,000 in additional annual costs. But, and this is the crucial point, if you're saving $5,000, $10,000, or even $20,000 or more in self-employment taxes, these costs are a mere drop in the bucket. It's a net gain, a significant boost to your bottom line, and a smart investment in professional expertise that protects you and saves you money. This is about being smart with your money, not just avoiding what feels like extra work.
Plan to address different demographics because this strategy impacts various business owners differently.
If you're a new freelancer just starting out making a few $1,000s on the side, you likely don't need to elect S-Corp status just yet. Focus on generating consistent revenue, getting your basic business systems in place, and growing your client base. But keep this election firmly in the back of your mind. As soon as your net profit starts consistently hitting that $60,000 to $80,000 mark, that's your undeniable cue to talk to a professional about this. For those of you who have been running your LLC for years, perhaps even decades, as a sole proprietorship, and you're consistently pulling in six figures or more in profit, you need to stop what you're doing right now and look into this. You have very likely been overpaying the IRS for far too long. Imagine how much more capital you would have had to grow your business, to invest, to build your personal wealth if you had made this election years ago. It's not too late to start saving, but every month you delay is another month of overpayment. For consultants, coaches, and high-income service providers, where your primary expense is often your own time and expertise, this strategy is practically tailor-made for you. Your profit margins are typically high, meaning a huge chunk of your income is currently subject to that brutal 15.3% self-employment tax. This S-Corp election can be a true game-changer for your personal wealth and your ability to scale your business. I know this sounds like a lot. Taxes can be intimidating, confusing, and frankly often quite boring. But I want you to understand the profound, life-changing impact this one decision can have. This isn't just about shuffling numbers on a spreadsheet. It's about freedom. It's about having more control over your money, more resources to invest in your future, to take that dream vacation, to provide for your family, to simply breathe a little easier knowing you're optimizing your financial situations. Don't let fear, inertia, or the perceived complexity stop you from claiming what is rightfully yours. This isn't about cheating the system. It's about understanding and intelligently utilizing the system the way it was designed to be used by smart, proactive small business owners like you. As with any powerful tool, there are ways to misuse it, and I want to save you from these potential pitfalls. The biggest mistake, as I mentioned, is setting an unreasonably low salary. The IRS is sophisticated. They have data on what similar professionals earn in various industries and regions. If you pay yourself $20,000 when the market rate for someone with your skills and responsibilities is $100,000, you are absolutely asking for trouble and an audit. Another common pitfall is neglecting the payroll process entirely or not keeping proper, meticulous records. This requires diligence. You need to run payroll on a consistent schedule, pay your payroll taxes accurately and on time, and keep all your documentation in impeccable order. Don't try to DIY this without professional guidance, at least not initially. It's too important to get wrong. And remember, while the self-employment tax savings are at the federal level, states have their own unique rules and requirements. Some states have their own income taxes, and some have specific S-Corp requirements, annual fees, or nuances that you need to be aware of. Always check with a local professional to understand the full picture for your specific state and jurisdiction. So, what's your urgent next step? If you are a business owner with an LLC generating consistent, significant profits, and you haven't yet elected for your LLC to be taxed as an S-Corp, stop right now and schedule a consultation with a qualified, experienced CPA who specializes in small business taxation. This is not a DIY project for your first rodeo. They can help you determine if the S-Corp election is truly right for your specific situation, help you file Form 2553 correctly and on time, and guide you through the process of setting up payroll and maintaining ongoing compliance. Don't wait. Every single month you delay, you are potentially losing money that belongs in your pocket, money you worked incredibly hard to earn. This is urgent. This is important. This is about securing your financial future and building the life you truly desire. Go take action now.